Business news now, and it's an economic nightmare evoking the bad old days of the 1980s. The Bank of England has warned that Britain is heading into a long recession, but inflation is so high that the central bank was forced to hike interest rates by 0.5 percentage point, the biggest rise in 27 years. The rate rise was largely expected, but the grim economic outlook came as a surprise. Here's the Bank of England governor explaining the decision at a press briefing earlier.
Returning inflation to the 2% target remains our absolute priority. There are no ifs or buts about that. At this meeting, the committee voted to increase bank rate by 0.5 percentage points to 1.75%. The committee judged that a more forceful policy action was justified at this meeting, as there have been some indications that inflationary pressures are becoming more persistent and broadening to more domestically driven sectors.
Andrew Bailey. Now, the Bank of England isn't the only central bank struggling to control inflation. Heavily indebted Argentina is facing a similar struggle, although the government there is trying to limit price rises by reining in government spending. President Alberto Fernandez is hoping new economy minister Sergio Massa will be able to turn the country's finances around. Mr. Massa, who is the third economy minister in just a month, has announced a series of measures to tackle the country's troubled finances. They include meeting a budget target of 2.5% agreed with the International Monetary Fund.
Today we had our first working meeting with the fund, IMF. It was productive, in the context of the implementation of the program, to continue with the planned disbursements and to face the challenges that I have been highlighting to you from these measures. Inflation is one of the main issues to fight. I understand that the last month and the one that just started, products of the difficulties that we are facing as a country and government, will be the most difficult in terms of inflation, and from there we will begin a downward curve. I'm not a super anything, not a magician, nor a savior. I have come to work in a very determined way to try to help Argentina do well.
Well, for more analysis on that rate hike in the US, let's cross to Arise Business correspondent Laurie Laird, who's been following developments from London. Good to see you, Laurie. So in addition to the Bank of England raising Britain's main interest rate by 0.5 percentage point, the biggest rise in almost 30 years, it's made pretty gloomy economic forecasts. Tell us more.
Yeah, that's right, Charles. The 50 basis point or 0.5 percentage point rate hike did not come as a surprise. In fact, a couple of weeks ago, Andrew Bailey, who's the governor of the Bank of England, told us that a 0.5 point rise was on the table. Those are his words. Had the bank not lifted rates by 0.5 percentage point, it really would have got in the way of their credibility. And the Bank of England's credibility is really lacking right now. It is worth saying that one member of the Monetary Policy Committee did vote for a more shallow rise, 25 basis points, 0.25 point. The other 8 members went with that 0.5 point rise. Again, no surprise, but my gosh, the gloominess of the bank, these new forecast today, the gloominess really did catch everybody by surprise. The bank says that growth actually fell in the second quarter. We'll get those data next week, and then we should see very little growth in the third quarter before entering a recession, and not a technical recession as we've been talking about in the US, but a proper recession. Growth will fall for 5 consecutive quarters. That should take about 2.1 percentage points off the UK economy from peak to trough. This is so much worse, Charles, than anybody had anticipated. And only a couple of months ago, the bank was saying that the economy would probably stagnate in 2020, stagnate in 2023. So at the end of next year, we'd have gone nowhere. They're now saying a pretty hefty recession, nothing as big as what we saw in the financial crisis, where we saw 6% of the UK economy wiped out. But 2.1% is really quite a big number, much, much more severe than any predictions we're getting from any other big economies. And Charles, if that weren't bad enough, the Bank of England now sees inflation peaking at 13.3% 8% come October. A couple of months ago, they were looking for it to peak at 11%. We thought 11% was high. 13.3% is like what we saw in the 1980s when the UK was very, very much the sick man of Europe.
And you mentioned, interestingly there, Laurie, 5 quarters. I mean, that's the longest in terms of duration recession since the, as you said, the great financial crisis of 2008. I mean, I'm not sure I recall them preemptively predicting a recession in this manner. I mean, what's behind this rather gloomy forecast?
That's a very, very good point, Charles. We don't tend to see central banks, and particularly the Bank of England, which doesn't have the greatest forecasting record, we don't tend to see central banks predict this far ahead. We tend to see central banks trying to put a good gloss on things, trying to sort of see the glass half full. The reason for this is, in a word, that inflation. Inflation essentially acts like a tax. It makes things so much more expensive. And essentially, earnings are rising by about 5% a year, depending on what sector you're in. Inflation hitting 13% per year. That means people are taking, on average, a pay cut in inflation-adjusted terms of 8%. That is a massive, massive pay cut. And in fact, the Bank of England, just to add to the gloom, the Bank of England said that the fall in living standards in 2022 and 2023 will be the worst since records began. Those records go back to 1964. And so people will be spending their income on essentials, on discretionary items like heating bills, like fuel to drive around, like food. You can't really cut those out of your spending. But if you're making less money in inflation-adjusted terms, what you will tend to cut out are the discretionary items, things like holidays, new clothes, eating out in restaurants, that sort of thing. So that is what's going to slow the economy down. And the Bank of England said they do expect to see a fall in consumer spending over the next couple of quarters.
And of course, Andrew Bailey, the governor of the Bank of England, actually uttered the R word. You know more about these things. I mean, in spite of that, he's raising interest rates.
Isn't that remarkable, Charles? We haven't seen anything like this since the 1980s. We haven't seen inflation this high, and we haven't had a situation where a central banker, and Andrew Bailey's not alone here, inflation will go higher in the UK than in other places, but most advanced economies, except for Japan, are seeing the same thing, very high inflation and slowing growth. Now, the Bank of, and the central bankers were very relaxed about this at the beginning of the year. Remember, Andrew Bailey, Jerome Powell in the US, Christine Lagarde at the ECB, were all saying inflation will be transitory. Nothing to see here. Don't worry about it. It's just a reaction to the pandemic. Some shortages in goods, that's raised the price of goods. It's going to go away. Don't worry about it. How that story has changed. And it's been really, you have to go back to the 1980s where we had a situation where inflation became so high and so embedded in the economy that central banks were forced to raise interest rates, despite the fact that that will slow the economy down and exacerbate any downturn.
And Laurie, beyond the UK, what about other economies? I understand the European Central Bank has become extremely unpopular.
Yeah, if you could forgive me a light moment on a very gloomy economic day, Charles, when you look at Google Maps, and I'm hoping we'll have some video of this, there's a way for people to rate all sorts of restaurants, architectural items. And the rating for the European Central Bank has gone down from 5 stars to under 3 stars. And people are using this Google Maps rating to criticize the European Central Bank for not getting a handle on inflation. I had some video prepared. It doesn't seem like we have it up, but the rating for the ECB on Google Maps is falling precipitously, not because it's not a nice building. It is. It's a spectacular building. It's because Europeans are so frustrated about high inflation there.
Well, we don't actually need video when you're explaining things, Laurie. You do it so vividly. So thank you very much.
That's very kind.
Laurie Laird, Arise business correspondent.